You signed one piece of paper at 18. That single signature could follow you for the next 30 years. For millions of Americans, that's exactly what happened. Student loans were supposed to unlock opportunity, a college degree, a better job, a better life. And for many people, they did. But for millions of others, that same signature quietly became one of the biggest financial burdens they'll ever carry. Today, Americans owe more than $1.8 trillion in student loan debt. Around 43 million people are still paying it back. Before many borrowers buy their first home, start a family, or build meaningful wealth, they already owe between $39,000 and $43,000 on average in federal student loans. For years, payments were paused during the pandemic, but when those protections ended, millions of borrowers suddenly had to start paying again. Many fell behind. Others entered default for the first time in years. Here's where things become serious. For most federal student loans, missing payments for about 270 days generally leads to default. Once that happens, the government may garnish up to 15% of your wages, seize your federal tax refund, and severely damage your credit score. That can make it harder to finance a car, qualify for a mortgage, or even rent an apartment. What makes student loans different from almost every other debt is that they generally can't be erased through bankruptcy. Credit card debt, medical bills, and many other debts may eventually be discharged. Student loans usually remain with you unless you qualify for very limited exceptions. Not all student loans are the same. Federal loans generally offer protections like income-driven repayment plans that adjust payments based on your income. Private loans often have higher interest rates, sometimes between 6.5% and 13%, and typically offer fewer protections. So what should every borrower know? First, understand whether your loans are federal or private. Second, if you're struggling with federal loans, explore official income-driven repayment options before missing payments. Third, never trust companies promising instant loan forgiveness or asking for upfront fees or your federal student aid login. Student loan scams have become increasingly common. None of this means college is a bad investment. For many Americans, higher education still leads to higher lifetime earnings, better career opportunities, and greater financial stability. The real lesson is simple. Never sign for debt you don't fully understand, because the most expensive signature you'll ever make may be the one you signed before your career even began. Follow CapLink's Finance for smarter money decisions.